we've got with us Nikunj Sanghi, MD at Fourwheel, and Kale, Vice President Equity Analyst at Elara Capital as well, joining in on the show right now. Gentlemen, great to have you both on the show, Jay as well as Nikunj. Nikunj, if I could start the discussion with you. Companies of late have been announcing price hikes, but in segments where demand is subdued because such as in case of tractors or two-wheelers, do you feel the impact on demand will be more and companies may actually hold back announcing price hikes? Or do they have no option left but to hike prices given the kind of, raw material cost pressures that they as well are facing at their own end?
You're right, Nantara. Good morning. And I think it's a very catch-22 situation for the automotive industry. And specifically the two segments that you mentioned, tractors and two-wheelers, there is already a subdued demand. Affordability is becoming a major criterion, specifically at the entry level. And I would say it's even impacting the entry level of cars. So while manufacturers would be tempted to pass on the price increase, but if they do, it's going to have a negative impact on demand, which is already subdued. So I think while looking at the bottom lines, they will also need to see the numbers that they want, and it'll be a tough balancing act for most manufacturers.
Sure is. Jay, hi, Aisha here, and like Nikunj rightly pointed out, it is a bit of a catch-22 situation. But what happens at an earnings level? Do you see margins taking a hit for across-the-board Motan for the fourth quarter? Because different segments have sort of a varied lag effect, so I don't know whether you can paint the entire auto industry with the same brush. But given this tightrope walk that, the auto industry per se, whichever segment it may be it tractors, two-wheelers, CVs or passenger vehicles, are sort of facing, net-net, are we looking at margin squeeze here?
Yeah, good morning, Aisha. On the raw material side, like you mentioned, I would just go back to Q3 and at the start of Q4, things were just easing off in terms of raw materials. They had stabilized. Companies had largely covered the cost increases. But then from Feb end, we saw raw material index moving up in the range of around 10%, which is quite sharp, and to offset that, they will need another round of price increases, which, like Nikunj sir also mentioned, that is a little difficult in the current scenario. So what we are seeing, this cost increase that has come in from Feb end will obviously come with a lag of 3 to 6 months in the company's financials once they report, given their raw material contracts with the suppliers. But what this could do is, our analysis suggests that around it could dent the EPS by around 10 to 25% for most of the OEMs, given the incremental raw material pressure that we've seen. Now that is assuming that they are not able to take any of the price increases because of this incremental pressure in FY23. While we believe that in the fag end of the year, they could take a staggered price increase. But definitely in the next couple of quarters, you could see this impact coming in because of raw materials, and that ranges between 10 to 25% different for different companies based on their fixed cost structure.
But just to build on this point a little more, Nikunj, and with that, I'll come to you, and that is, of course, prices will need to go up. Price hikes have to be undertaken simply because of what's happening with commodity run-up, etc. But like Aisha was also pointing out, we have a problem with demand, right? Because of inflation and other things, plus the slowdown in the rural economy. Can the market absorb the price hike? How it will impact the volumes? So Nikunj, what would be the best way around this?
I think demand to good, specifically, we may still have waiting lists. We still have customers waiting for the vehicles. And some companies have reported a waiting list of over a year. So I guess except there where I see the price increase being passed on, some of the manufacturers have already talked about a price increase from 1st April. I don't think there is too much room in the other segments to pass on the price increase. But given the margin pressure and given the fact that we are at the end of the financial year, we might see some more price increase announcements coming in April.
Okay, so you're expecting price hikes in the month of April. So stand by for it. Of course, let's see what's also announced by the various companies with the earnings as well. Now, Jay, there are, of course, a lot of headwinds that have suddenly come up for the auto sector, right? When we talk about that. We've discussed it with the semiconductor shortage, prices of commodities going up, supply disruption. Toshiba has alerted that there might be even the semiconductor shortage going through this year because of the Ukrainian crisis. But Jay, what about particularly the two-wheeler space? Because there also we had seen a lot of degrowth.
Yeah, I mean, two-wheelers has been under extreme pressure. We are, in FY19, we had done a peak volumes of around 21 million. In FY22, we will close around 13.7 to 14 odd million of volumes for the industry. So we are quite below the peak volumes. Of course, there has been approximately 35 to 40% kind of a price increase in the last 3 years to the consumer. So that has also dented demand. But going forward, I think, from on a low base with the rural kind of settling down and along with some bit of, boost of the EV segment, we are expecting a growth in FY23. Of course, but these assumptions, we were expecting close to a double-digit growth in FY23 on an extremely low base. But these assumptions were before this incremental crude price increase. So that will have some bit of a dent in terms of consumer sentiment, in terms of the cost of acquisition and cost of operations as well. There's a three-pronged impact on the two-wheeler and the entire auto sector. One is because of the raw material side impact of the EPS. Second is because of the unquantifiable impact on the demand situation because of the crude price increase. And third is the supply side issue because of the Ukrainian crisis and how the supply chains get impacted. On the supply chain side, I think the two-wheelers are relatively lesser impacted because they need a lesser amount of chips and electronics content relative to, say, passenger vehicles. More so, in the entry-level two-wheelers will be lesser impacted. But I think there the question is about demand so much and not so much about supply. So I think from the three-pronged impact, two-wheelers are more impacted on the first two side of it, which is the raw materials as well as the impact because of on the demand because of the crude price increase. Not so much on the supply side issues for the two-wheelers.
Morning, Nikunj. Wanted to talk about flex fuel or flexible fuel, which is essentially an alternative fuel. It's a combination of gasoline and methanol or ethanol. And I wanted to get in your view because the government is very confident about companies getting the flex fuel engine soon to play. But, how have you seen the progress on this front? And how are you looking at, the prospects of this being more promising for the industry as a whole?
So it's not going to be as easy as we think it is. And it's not because of the manufacturers not being ready. I think manufacturers will be ready with the flexi fuel engines. The compatibility will be there. I think the bigger problem lies with oil marketing companies. Having two kinds of fuel available at all dispensing stations is not going to be easy because the older cars will need the unblended or the 10% blended fuel. They will not be able to take a 20% plus blended fuel because they are not compatible to that kind of blending. So I think the challenge is going to be huge for the oil marketing companies, and the transition is not going to be as easy as we think it is. And also coming to demand, I think the fuel price increases that we are seeing day on, and I think this will keep on going further. This is also going to have a huge impact on the two-wheeler industry, specifically the entry-level two-wheeler industry. And I think we will all need to be braced with further degrowth at the entry level of two-wheelers.
You concur that, when it comes to flex fuel, while the government seems to be fairly confident, there is going to be quite a bit of trouble in actual execution. It's not going to be that easy.
That was for me?
No, that was for you, Jay. If you could give us your views.
Yeah, absolutely. I mean, like Nikunj sir mentioned that, on ground, how the fuel stations adopt and how from the old vehicles versus the new vehicles, how the blending of fuel will impact the vehicles. The government has to be cognizant of the fact that, the old vehicles either the fuel mileage or the parts issue should not come in because of the higher blending of ethanol. So I think these are teething issues which will come in once the flex fuel engine vehicles will be launched. How the OMCs manage between the new as well as the old vehicles. So that's something that will be keenly watched. But there is no doubt that most of the companies will be launching new vehicles with flex fuel engines, both on the two-wheelers as well as passenger vehicles. So we could see incremental launches from both two-wheeler companies as well as passenger vehicle companies in the coming fiscal.
Right. Okay, Nikunj, Jay, both of you, thank you so much for taking the time out and giving us that perspective.